problem is that we're not
Blacks
telling
here in
the
this
Kids
city
are
have made
starting
a
to use
significant
drugs
contribution.
earlier in life than they ever have.
Welcome to Minority Focus. I'm your host, Jimmie Moore. We've got a lot of unusual things going on in our world, in our country, specifically in the financial arena. Being as how I make so little money, I know very little about it. But today I have a guest that is very well versed. I'd like to welcome to the show Mr. Howard Arant, who is a senior vice president at Hiliard Lyons Investments. And if necessary during the course of the show, I may have 4 or 5 pointers I'll give to him as to how to do some different things. Welcome, Howard.
Thank you.
It's good to have you. Been about trying to get you here for a spell now, and finally got you here. Glad to have you. Got to be an interesting show because I know that in Paducah there are a lot of people who invest, as in most places. There's a feeling, I think, amongst a lot of people that in smaller towns things aren't as bad as they are in larger towns. For example, our gas prices may be lower than the prices in California or New York. Housing is cheaper, et cetera, et cetera. Everything's better in small towns, supposedly. But that's all mute when it comes to what you do.
Correct. Jimmy, in our world, we assist our clients in investing in various securities to fit into their financial plan or retirement plan, and we do a lot of stock market activity. And of course, when the stock market goes down significantly, like it has in the last few weeks, it's the same for the guy that lives on Broadway in Paducah as it is the guy that lives on Broadway in New York City. You know, IBM's worth half. It's worth half there as it is here. There's been a lot of anxiety, a lot of fear here lately about our economy. Obviously the stock market is way down, but there's other issues out there. They call it the credit markets, where the banks have been very reluctant to lend because of they have bad debts on their books now, and they don't want to add to those. And so we're in quite a turmoil now. And with Hiliard Lyons, we are a regional brokerage firm, which means that we're in half a dozen states: Michigan, Indiana, Kentucky, Tennessee, North Carolina, Georgia, and we have 400 financial consultants like myself that in each of our geographic locations we have a clientele that we advise on their investments and also their financial planning in general.
Could I hate to call myself this, but your average Joe Blow, speaking of myself, with the salary that I make, must I be a multi-millionaire in order for you to help me make money?
No, as a matter of fact, most of our clients are not multi-millionaires, and we find that we give advice to or counsel to individuals that may not even have any money with us. If they come in and just want to seek some guidance, we do that. And then obviously we do people who have funds to invest, they become our clients. We don't have a set minimum, but probably with our firm for us to do investment services and have you properly diversified, you should have over $50,000 to invest. Anything less than that is probably needs to go in other avenues for cost efficiencies.
Right. I want to back up just a second. In lieu of what's gone on in the financial arena recently, what's been the response or the reaction and the advice given to people who invest in the Paducah area?
Our telephones have been busy. Everyone's concerned. The media puts a lot of negative spin on things, and that gets the public fearful. So we do a lot of hand-holding during this time, and for those people that have a longer-term horizon where they will not need their money for 5 to 7 to 10 years, our advice to them is to hold on to what you got. Don't be selling in this low market. For people that that are retired, hopefully prior to this, their advisor had advised them to be diversified, where all of their money was not or is not in the stock market. So they have other funds that's generating income for them, and they can live off that until the market comes back up.
Right.
I think a third category, Jimmy, is showing how significant this is I've had people call me that tell me, I can't stand it anymore. The market is up several hundred points one day, it's down several hundred points, and it's starting to affect my emotions and my comfort level, and I want out. I don't want to have to listen to CNN every day to see how my lifestyle is going to be. And for those people who are really just almost border on being physically sick, we'll do what they tell us to do and get out completely and get into some other safer, more stable investments.
Right. And you mentioned people having investments or being invested in areas other than the stock market, depending on the money that they have, their worth, then some of those areas could be even more substantially financially beneficial to them than the stock market. Is that the case in some people's?
I think it is, Jimmy. Over long term, and this goes back to the 1930s, if you were invested in the stock market, that particular investment over that long period of time has been superior to other investments.
Right.
However, there are times that we hit some significant valleys that you have to have a feeling for that you expect them and you're going to live through them and go on. But I think when you go away from stocks, you go away from potentially higher returns and potential risk.
Right.
The higher the return you expect, the higher the risk you take.
Exactly.
Risk and return goes together. So looking for alternative investments would be things such as bonds, where you're not into the company's stock performance, you're actually loaning them money.
Right.
So all you're going to get there is an interest rate
Right.
back and your principal, as long as the company's sound. Certificates of deposit, Hiliard Lyons does quite a few of those. You get into energy items where you may get a royalty off of there's a product out there where the public can get royalties off of the Alaskan pipeline. And you get that coming in, you get some diverse income coming in where you're not so dependent on the stock market.
Right. With all the variations, the different type funds that you can get into, some job situations, the A, B, C, D, the I think, which is the international fund. Mm-hmm. Those people that are invested in those areas in the overseas market, parts of their portfolio
mm-hmm.
are dealing with that. With what happened recently, with those people rebounding, and I've heard they're rebounding in a lot of those countries now, did they experience that same dramatic drop as went on here?
This is a smaller world now. We're all neighbors. So when America sneezes in its economy and catches a cold, it spreads to other parts of the world, and we usually lead that. So right now, the Asian markets are in a downturn. China has slowed down a little bit, but Jimmy, it's hard anymore to be isolated in what we're doing, as in Asia and China and India. they're not immune to what's going on over here. When we have problems, it gets over there because we're also interconnected with our economy and world trade. And it has been common wisdom to, in your portfolio, to have a certain percent in international or companies that are based outside the United States, and that still is a good idea, but that doesn't mean that they're going to be isolated in their issues too.
Right. Recently, within the last week or so, gas prices have dropped, dramatically. And to a lot of people, that may be some indication that things are definitely better. But in listening to the news and some of the commentators, that doesn't make a huge difference. And in some cases, no difference at all in what's happening in the stock market. That's all about the oil supply and all of that. Is that something that you've experienced from some of your clientele, that they feel that because gas is only $2 or less nowadays, that means everything's better? So start investing and take everything I've got and invest it for me. They got that attitude?
No. That's it is a nice part of the puzzle that we have in that gas prices are lower. That has certainly helped the consumer. But there's other factors that make up our economy, and unemployment, and the cost of our commodities like food and things like that have not come down. And so what drives our economy quite a bit is the consumer. And it's a mental thing. If they're not comfortable that their job is going to be around, or they're not comfortable because their 401k is much, much less than what it was, and they watch the media and they get this pessimistic view of the world, then they're not apt to go out and buy that extra TV or buy a new car or go on a vacation, because they feel the need to preserve money. And even though the gas prices are down, that's good, but it's not enough to spur spending. It's between the ears.
And that's where you come in. For people who might have that kind of attitude, then you're there to say, "Hey, time out. Let me tell you something. You don't need to." Et cetera, et cetera.
And I've done a lot of that. And Jimmy, as a person myself, my assets are much less than they were. So in the mornings, I have to pump myself up in front of the mirror and say, "Howard, it's going to be okay."
Exactly.
So by the time I get to the office, I can help my clients feel better.
Right. So in the case of, this is a curiosity, like I said earlier on, I'm way out of my league with this thing. That's why I wanted you on the show. In the case of employers or corporations or what have you, if they look at this situation as a means or it's necessary to shut down this, shut down that, let go X number of employees, and that sort of thing, when it's not inevitable that the crisis is going to be as bad as the media makes it or whatever, what happens to them when things pick back up? Those people that they let go, those jobs that they shut down, does everybody jump back on the bandwagon? And like I mentioned earlier about, here's a whole bunch of money invested because things are better now. Does the corporate world hold those kinds of strings on what's going to happen when this does get better? And it's going to get better.
Well, yes, it's going to get better. Our country has been through different kinds of challenges. Now, this one is unique and very significant in and of itself. And you're right, companies to survive are all looking at their expenses now because the revenues are declining, and they're looking for places to cut. So we're getting some layoff numbers, in the automobile industry. The financial industry is laying off. That's a little unusual, but they are. And these people, a lot of them are getting severance packages and retraining. Now, when the economy does pick back up, those same companies will be looking to rehire.
Right.
But for the individual, you've got to live between now and then, and I think that in our world, retraining and getting other jobs in industries that might thrive better in this environment, would be
Right.
smart. You can't sit home and wait for General Motors to call you back because you don't know when the recovery's coming.
Exactly. I was thinking earlier when they were, I think at the onset when the market crashed 800 points, that everything was going crazy. That there were people who were thinking, we can rebound from this. We're going to rebound from this. So don't panic. Don't worry about it. Just go with the flow. And this is a message that you have to get across to a lot of the people that you deal with. Relax.
I think, Jimmie, relax. I think, Jimmie, the key here, and this is October 21 or 22, I forget the date, of '08. Okay, people watching this know when we're talking. The key is that we learn something from each calamity that we have. The latest calamity in our markets prior to this was what they call the tech bubble back in the early 2000s, where any technology company soared in value on the market just by being formed, and some of them didn't have 1 or 2 employees. And we got carried away with that, and we thought, well, tech is here to stay, tech's the future, tech's going to make us a lot of money, so we all bought tech. Even the smartest guys on Wall Street loaded up on tech, and then what happened was that tech blew up. The earnings weren't there, and so we learned then not to get too concentrated in our investing as to any one industry. Well, I think the lesson that we're going to learn from this particular one is that you're going to have to be balanced in your investment approach and be sure that you're not solely dependent on the stock market to fund your future needs, either education, retirement, or whatever. So I think that's a lesson that's going to come out of this is, yes, the stock market needs to be a part of your portfolio, and depending on your age, what size portion. But I think there's going to be other vehicles that will need to be in there for further diversification.
Right. It's sort of like the thing that just happened with oil, disastrous. For it to go as high as it did, $118, $19 a barrel or what have you. And today it's down like $9, $10 a barrel. That disaster we've come through.
Yeah.
Not that we did anything necessarily to make it happen, but we weathered that storm.
Yeah.
And you see this as a storm that's going to
I see this one as a significant storm.
Significant, okay.
And in hurricane words, close to Katrina. We're sitting here where some firms that we thought were here forever a year ago, Merrill Lynch, Bear Stearns, Washington Mutual, a big insurance company called AIG. Those are foundational companies in our country, and they no longer exist. AIG does in a small way. But I would call it a Katrina in the financial sector to give you the significance of it. Now, there's a lot of things going right in our economy. We keep, the world is working now. But on Wall Street, it was a Katrina. Companies went out, employees by thousands lost their jobs, and that does ripple down to Main Street. So this is significant.
Even some of those agencies that you just mentioned, I've been paying attention on television, and I noticed that there are several of them who advertise as if nothing's happened. Offer the same services and still the wonderful, fantastic. But these guys are in that too. Nobody's been immune to it.
No.
How do they do that? How do they still?
Well, confidence is a key word, Jimmie, in the financial sector. You've got to have confidence in your financial firm that you deal with, and that's what they're exuding on TV, that we're here, we're strong enough to deliver, and even if they're on their last dollar, they, to survive, they've got to, the public has to have confidence in them. And especially in banking, you know, back in the 30s, we had runs on bank, and it was because of people didn't have confidence in them to have money when they needed it. So it's nothing on the balance sheet, although they had some bunch of junk on there, but confidence in some of those companies, lack of, is what brought them down.
Right. See, you know, of course, it wouldn't have been, you know, healthy to mention any names, you know, but it's a deer still running around saying, I got it all.
Yeah.
You know, but people know better than that, you know,
Yeah.
because from having read and watched television and paid attention, that everybody's feeling the sting of it, you know.
Yeah. Who do you trust these days?
For
You know,
sure.
that's a big part of it.
For sure. You know, my mom used to always say, don't trust anybody but yourself. 'Cause
Right.
anybody can fail you.
Yeah.
You know? But in this particular situation, anyone you deal with, I mean, you know, there are no absolutes, you know, guarantees, you know. And I wonder if the stock market could have another name, you know, like roulette. Or
Yeah,
one
I've often told clients when they come in with a stock idea that I'm not real wild about, I'll say you might as well take that over to the riverboat and have some fun with it.
Right. Because anything can fail. If anything can fail, it will fail.
We've had in this country around 50 banks fail this year. Now those are people had put money in there and they felt secure with it, and they had FDIC insurance, and they all came out okay, but still nobody wants to be a customer of a failed bank or one that's going to fail. So even the safe corners of our economy, such as banking, is suspect. You know, people used to just put money in a bank and that was it. They wouldn't ask any questions, but now they ask, how safe is this bank? I know it's insured, but I don't want to go through that. Is this bank okay? And years ago, that was not asked.
Right. It's like you track somebody's history. You read about, you find out how an institution has performed to see if there's anything in there that says maybe you shouldn't go here.
Yeah.
You know,
Exactly.
or if it's been good selling for them, then you know
Exactly.
Maybe you should. I don't know that it has anything to do with the people who are in positions such as yourself. You know, we hear on television about some of the people that are leaving these companies as a result of the things that have gone on, and the multi-millions of dollars in severance that they're getting and all of that. They in themselves can't have, surely, that kind of direct influence on what happens in the stock market. Their personal minds, is that real?
Well, they can influence it significantly. If they have control of some personal investments and some trust accounts in their own company's investments, they can get into the market with enough shares that it will affect a particular company. And that happens sometimes when some big shareholder of General Electric, as an example, decides that, you know, we need to settle Mom's trust and I need to sell 1 million shares of GE. Well, that's a big deal. Right. And so but the guy on Main Street, no. There's no influence there, except when they act as a group. And normally the markets say, well, when you see Main Street selling and getting out, that's the time that the guys that are watching it decides to buy, because they figure the panic has reached down to Main Street and everybody's getting out, and those are last guys out. And then here comes in the professional investors and says, well, I think we'll buy now. Everybody's scared and gone, and we'll buy. And
so it's like when you see the captain headed for the lifeboat.
Yeah.
you know, you might
want to act.
Look for one too.
Yeah.
So for the moment, for right now, that guy who had $5,000, $10,000, $20,000 socked away somewhere, not necessarily being invested, but had been thinking about doing something with it to make some money. Right now, do you tell that guy, wait? Or do you tell him, got something I can do for you?
I tell him to wade in, Jimmy, because I don't know when the bottom is. You know, there's been people calling the bottom for the past few months, and so far they've all been wrong. So if a guy comes into me and says, I've got some money and how can I take advantage of this market? How can I look at it as an opportunity? Then I'll probably tell him to put in maybe 10 or 15% each month for the next few months until we got it all in, but not all in one day.
Right. Yeah, okay, Howard. So maybe this is interesting. It's very interesting, and I don't know that there's a lot of public things going on to inform people about what's happening here. You're the first I know about it. I've not seen any public figure, that's involved with an organization like yours, speaking to the public, Paducah's public, about it. And here's hoping it's not necessary that you'll have to do it again. That everything will smooth out and everything will be a-okay. But in the near future, what do you think about coming on doing maybe an hour call-in show where we can have people call in and ask you questions that I can't begin to know how to ask?
Well, Jimmy, for the pay that you're giving me, it's hard for me to resist doing that again. So count me in.
Thanks a lot for coming. I really appreciate it.
Thank
I
you.
hope somebody's gotten something out of what you've been saying. And in the future, maybe we can get you back to talk some more about it, And in the meantime, I got $40, $50. Could you do it for me? Oh, thanks a lot. I really do appreciate it. Thanks a million. So Howard Arant of Hiliard Lyons Investment Corporation. Go talk to him one way or the other. If you got it, if you ain't got it, go give him a shot there. Keep in mind the number of helpful organizations that are on Paducah2.org. There are a lot of help situations out there for those kids who are thinking about careers and what they want to do and how they want to live their lives as they grow. There is something there for you. If you want to get to where somebody is and don't know how to get there, you can talk to them and find out how to get there. Check the internet out. It's a lot of things that this station has to offer, in addition to minority focus. What can I say? Here's hoping that you'll join us again for our next rendition. Hope everything's always interesting to you. And if you've got items of interest that you'd like to hear discussed, let me know. Be glad to try to get a hold of those people to talk to you about it. For Minority Focus, I'm Jimmie Moore.